Welcome back to Chess for Stress. How to live off your dividends. For most investors, a safe and sound retirement is priority number one. If that's your goal, retirement, it doesn't have to be retirement. It can be any particular goal that's your particular priority. So the bulk of many people's assets go into accounts dedicated to that purpose. However, living off your investments once you finally retire can be as challenging as saving for a comfortable retirement. One way to enhance your retirement income is to invest in dividend-paying stocks, mutual funds, and exchange-traded funds, ETFs. Over time, the cash flow generated by those dividend payments can supplement your Social Security. If you're not in the USA, you may have a different type of Social Security net or safety net for income in your particular country. So just substitute the word Social Security and pension income. Pension income pensions are becoming kind of like Social Security, kind of depending on which country you're in, pensions are kind of like going the way of the dinosaur. They're kind of like few and far in between. I'm not sure unless you're working for the federal government. I'm not sure private companies are continuing to do pensions. But if you do or have a company that does have pensions, instead of just offering 401k packages or other packages and benefits in that package, I would like to say that get and take full advantage of that. But at the same time, if you plan on being with a company for say 30 years or more, and they offer a pension, whether federal government or civilian employee, hey, take full advantage of that if that's what you want to do. I know with FIRE and a lot of other these trends or fads or whatever that's coming up every 10 years or so, a new generation decides they want to do something a little bit differently. That's fine and great and all, but yeah, for those type of situations, that decide, well, they don't want or don't need a pension. They just want to save up enough of their income of maybe 20, 40 or more percent, as much as possible, invested, and then just live off the dividends. So it is possible. Of course, with a company's pension, you may also have other benefits and things like that that are included, like discounted or fully paid health care, and or you may have some type of health care accounts and things like that, or medical benefits or insurances that are covered, depending on your job and depending on your situation, business that you're in. If you're self-employed or you own your own business, there's other programs, especially in the U.S., maybe other countries as well, for that, to handle for you to put in and make sure you have health insurance and health care long term, and even after you decide to sell your business or to just live off the income from your business and not fully active in your business. So that's one of the equations that a lot of people, that get excited with FIRE and other trends or fads or things that are going on in the current society, or trending, I should say, in society, of they have to add that life changes, health care, for one. It's great to have a bunch of income when you're not healthy and no insurance, but then, or medical insurance or health insurance or life insurance. But if something happens, that could pretty much wipe you out right there. Or if you get sued, like if you get in a car accident or something like that. So a lot of those things that we don't like to think about, like death and taxes and et cetera, they can come back and haunt you. So those are the things that need to be added in your plan, not just the income. The income is the is the core. It's very, very important, but at the same time, you want to make sure you have proper amount of insurance to cover yourself and your family. Or if you don't have a family, think about your future family. Think about your future self. Those things are kind of hard to do when you're starting out, but believe me, the time will go by fast. Soon enough, you'll be looking at yourself 20 years from now, 30 years from now, and you'll be like, where did the time go and what happened? And believe me, you will definitely thank or appreciate or have gratitude for that person you was 20, 30, 15, maybe 10 years ago, 5 years, even 5 years ago, for the decisions that they have made in order to make sure that you have income whether you work or not. And that's why we're talking about dividend income today, or living off dividend income, if you can, or if it's possible for you to live off of dividend income, or supplement your income, your pension income or Social Security, or your other income. So we always try to talk or think about, having multiple streams of income, or just to make it simple, just to have income or cash flow from various sources, not just one particular income that, because if that one income, for whatever reason, goes away, or is not permanent, or you stop working, and it just totally goes away, and, so we're thinking about incomes that will be around for your lifetime, maybe even some incomes that can be passed down and inherited, or help your family out if you're not around. So it's important to have insurance. It's important to have all your planning and ducks in a row. Highly, my opinion is highly recommend getting a CPA, a fiduciary financial planner, etc., to help you come up with strategies and planning. And if you're a DIYer or do-it-yourselfer, that's fine too. But you can always have a second opinion. Just like going to a doctor, if you feel something is wrong with your health, you can go to a doctor for a second opinion. So it's always recommended to have others just double check your plan, just to make sure you're not missing anything that's important, like health insurance, and how much you would need and how much you would have to put in order to make sure you always have that. Okay, so it can provide you all the money you need to maintain your your pre-retirement lifestyle. It is possible to live off of dividends if you do a little planning. Takeaway: retirement income planning can be tricky and uncertain. Augmenting your retirement account gains and a stream of dividend income can be a good way to smooth retirement income. Identifying the right mix of dividend-paying stocks and dividend growth potential is vital. Investors and retirees alike should not forgo growth, although in favor of yield. Small investors can use ETFs or exchange-traded funds to build diversified portfolios of dividend growth and high dividend yield stocks. In other words, in plain English, I'm sorry for those if this is not your primary language, English, but I'm just using that expression. They're pretty much just trying to say that, you know, ETFs or exchange traded funds, index funds, they invest in, you invest in one ETF or one index fund, and you pretty much have invested in a large number of dividend-paying or dividend growth and high yield, or high dividend yield stocks all at one time, such as the dividend aristocrats or dividend kings, dividend champions, etc., or dividend achievers, and you pretty much spread it out your risks or diversified yourself, because you're not just invested in just one or maybe 3, 5, or 10 or more stocks. And you're not putting all that money out there for all these different stocks. What you're doing it through one ETF, one or two ETFs or index funds, and you get exposure to all those stocks, all those dividend growth and high dividend yield stocks all at once. Like for instance, like with ticker symbol NOBL, Noble, you get access to some really great dividend aristocrats. So it's just something to look at, and where you spread out your risk, and at the same time you own the whole entire board instead of just a few pieces. If you understand chess terminology. There's also a video here on should you reinvest dividends. And there's a little note here about it's all about dividend growth. Stock dividends tend to grow over time, unlike the interest from bonds. That's one of the main reasons why stocks should be a part of every investor's portfolio. Furthermore, dividend growth has historically outpaced inflation. So that's awesome. So another reason you can give yourself for investing in dividend growth stocks or ETFs or index funds is that you're hedging against inflation. So the growth in the dividend will also keep pace with the with inflation, and therefore the value of your money and the growth of your money is not depreciating, like if you would just a saver and just left it in the bank. So it gives you some examples here. So dividend reinvestment strategy continues to increase the yield on cost over time. After 10 years, the hypothetical portfolio from the previous paragraph would produce around $7,000 in dividends. After 20 years, you receive more than $24,000 a year in dividends. And like I said, we don't have any crystal ball. No one knows what the future may hold, but it's always good to add different strategies to your investing, and having a dividend reinvestment strategy is awesome. It's great to have income and cash flow now, but in one portfolio, but then it's also good to have a second portfolio where you're reinvest, to get cash now to pay your bills, but it's also good to for the future to pay your future self forward, to have a dividend reinvestment strategy to compound all the earnings and money that you're earning. So, imagine you're earning $7,000 a year in dividends, or $24,000 a year in dividends, without lifting a finger, without clocking into a job every day, and you're earning that money. Yeah, you can live off of it, but it can grow a lot more if you just let it just compound year over year. But it also depends too on what your time frame is. You might already be retired, so it might just be a little supplement for you. So you may not need to reinvest it, or you may not want it to grow as fast as because you're already pretty much retired. You're not looking for growth or heavy or high growth. You're just trying to just make sure that you're just trying to make sure that you pay your bills, and maybe have some extra money left over for some vacation or other things that you tend to do. So also talks about here, what if you're already retired? They got master limited partnerships, REITs, and so many other ways to build your portfolio. Dividend ETFs, and it talks about the bottom line. And then it also talks about how Bitcoin is also an investment too, and how awesome it is, because it's also sort of like a hedge against inflation. It talks about how it consistently outpaces